This is called everyone thinks the market's about to crash.
It may have just ended before it even started. Let me explain. Bearish sentiment in the stock market right now is at such an extreme level that we have rarely seen investors this fearful in the last few decades. This despite the fact that the S&P 500 is down only 5% from its high. To even be able to call this a correction, we would need a 10% drop from top to bottom. And to be able to call it a bear market, we would need a 20% drop from top to bottom. So this level of bearish sentiment in the market is wild, especially considering that when we go back decades, we can see that right now, the bearish sentiment that we are seeing in the market is the 7th highest level of all time. And every time before this that bearish sentiment has reached levels this high or higher, it has been at the bottom of a major bear market. This is important to note because when investors, specifically retail investors, get this scared, it signals a turnaround in the market. It does not.
Whoa, is he saying the market has already bottomed? Is that really what he's saying here? Actually, I'll tell you one thing. He did change his title. Let's actually go review his title changes. I have this really cool plugin called View Stats. It's actually one of Mr. Beast's products. He sells this. He changed his title on March 5th. This is so funny. Oh my gosh. I got receipts, my friend. I got receipts, my friend. The bear market just ended before it even started. So this was the title 2 days ago. Now the title was changed to, this was 2 days ago. So when it originally came out, the bear market just ended before it even started. Then the market bottom is in and it's about to surge higher. Okay. Let's see. This means buy. Does it? Oh, I just downloaded that on accident. Oh, another title change. The market bottom is in, it's about to surge higher. Everyone thinks the market's about to crash. Well, that's funny. This may be one of those videos where he takes it down because granted, like I say, he puts out great content, but within 64 seconds of putting this on, he said the market bottom is in. And let's just double check that real quick. Oh, never mind. The market is now down 2% today, from all-time highs to now 6.6, let's call it 6.8%. And I'm telling you guys, we haven't even seen the fear kick in yet. We have not seen the fear kick in yet. When we see the fear kick in yet, it's going to look like COVID. You remember what COVID looked like? It was like dribbling higher and then smash down 35% in the span of like 10 days. That's fear. We've not seen fear at all yet. No way. But anyway, back to the video over here. So this is not aging well. Sorry, John. This is not aging well at all. Wait a minute. Hans, good to see you, Hans. I noticed Felix is starting to imitate you. Sorry. Nothing to do with this video. What did he do? Oh, it's so juicy. I want to know what's he doing. Does he also have a bullhorn? Does he also shout at the top of his lungs?
Only price pays. Only price pays.
That's what I would like to know. Oh no, we're not even close to. I know on the CNN Fear Greed Index, we are in extreme fear, but like not even close. In fact, let me pull up Outlier. I think I have SPY pulled up already. I do. We're not even close to extreme fear. Oh, does he have a monkey hammer? You're right. CNN does show that extreme fear. It does. But I'm telling you, like, we have not seen it. In fact, we just got into the fear on the Outlier heat map. We're only at 7 out of 50. And then even the constituents. So this is the market index itself. These are the average of all the 500 stocks within the market index. And as you can see, they're still slightly greedy. They're still slightly greedy. And they even started saying good gravy. Thank you. All right, let's continue on, see what he has to say.
Not signaled the beginning of a larger crash. And that's not the only survey showing this extreme bearish sentiment in the market. We can see this NDR survey about short-term sentiment is also showing extreme pessimism. Now, I've said it before, and I'll say it again, that bull markets do not die from old age. They die from euphoria. If you remember, the last bear market we saw in the stock market was from December of 2021 at the top to October of 2022 at the bottom. This saw a 27% drawdown from top to bottom, but it started following the 2020 and 2021 bull.
Okay, there. I think that's got to be the COVID crash right there. That's what extreme fear looks like. This right here is what extreme fear looks like. This is where we are. Do you see the difference? And even if this is pulled down a little bit more, that is nowhere close. One of these things is not like the other, right? That's extreme fear. And if we are already seeing extreme fear in the market, just wait. Just wait. You'll see candles in a shade of red you've never seen before. They're going to unlock a special shade of red for what that fear looks like.
Bull market, which if you remember at the time was marked by some of the most extreme euphoria we have ever seen in the stock market. And it wasn't just the stock market, it was crypto, it was NFTs, it was real estate, it was everything. And so just as bull markets do not die from old age, they die from euphoria, bear markets also don't die from old age, they die from panic. And even though the stock market's only down about 5% from the top, we are seeing an insane level of fear and panic selling by retail investors. If you look at the CNN Fear and Greed Index, we are seeing extreme fear for.
And this is crazy to me. I mean, if we get real fear, the CNN Fear and Greed Index is going to have to print like negative numbers. I mean, if we see real fear, it's going to be down here at like -13, right? It's not even close. We have not, dude, I'm telling you, we've not seen anything yet.
For the overall.
But hear me out. I'm not calling for a crash. What I'm saying is the market is not that fearful yet. Not at all. We have a new color called blood red. Yes, exactly. We might have a new candle named the monkey hammer red. Yes, exactly.
Gauge, and also extreme fear for every single one of that index's components except for the junk bond demand. Now, it's important to note here that the fear and the panic selling is largely retail. It's small, or what's called dumb money. Over the last couple of months, we've seen the opposite behavior from big money, from hedge funds. Over the past 1 to 2 months, we've seen an insane spike in institutional buying. In other words, hedge funds are going on a buying frenzy. Whereas a few months before that, you can see they were selling, which means during this big run up to the top, big money was unloading onto retail, indicating that every single one of these extremely volatile sell-offs and drops in the market over the last couple of months has been retail getting washed out. Every time small money buys back in because they think the selling is done, then another drop happens and it flushes them out. This causes fear, desperation, and panic. And eventually, everybody who was going to sell has sold, which means there's no more sellers left in market. And you can see his.
Okay. And that follows really closely with what we talk about all the time, right? All the time we look at this slide. And this is like a Wall Street Journal cartoon from like 1954 or something like that. This is old. This is freaking old. But this is how the market works. Right? People get excited to sell, and they start selling, and they start selling, but eventually they run out of sellers. Eventually those sellers turn around and they become buyers, right? This is how the market has worked in history of time. The history of time, it's worked exactly like this. So that's cool to hear John say something similar to that.
Historically, this level of volatility in the market, with the VIX being around 22 or 23, is usually the top before volatility starts to bleed out again. We've had a few examples of volatility briefly spiking above this level, but even when that happens, it doesn't sustain. And there's a perfectly good explanation as to why we could be seeing some of this volatility other than just panic selling. If you look at the global money supply, you can see that the last quarter of 2024 saw tightening. In other words, the money supply shrank and the year-over-year growth of the money supply plummeted. On a global scale, we saw tightening financial conditions as a result of the money supply shrinking. There is a lag effect to when the money supply impacts asset prices. And you can see that from November of 2024, for the next couple of months, the market has basically stagnated, moved sideways with excessive levels of volatility. However, since the beginning of 2025, early moves from November of 2024, for the next couple of months, the market has basically stagnated, moved.
So do you guys remember when I went to cash? And everybody was screaming like, Chris, why are you going to cash? Why are you going to cash? Right? The last trade I had in 2024 was November 22nd. November 22nd, 2024 was the last trade I had on for the year. And it was on this date here. This was the last trade that I put on. And then the market went sideways ever since that point. And I put on 2 in January and 2 in, no. I've only put on 4 trades for the whole year so far in 2025. Right. And it's because cash is a position. Keep close to that. Keep close to your cash. If you put your money in the market, it is at risk at all times, right? All stocks are bad, but every once in a while they act right. But you can see when they're acting right and when they're not. When you combine the breadth and you combine the trend, that tells you what's happening. So we got December 2nd was when breadth crossed bearish. December 2nd, all the way until January 2nd. So from December 2nd, let me draw a box on this. December 2nd. Oh, that's not the box I want. Hang on. December 2nd to January 2nd. It was bearish. And look how choppy that was. Don't have to trade. From January 2nd until it peaked on January 27th, which was one of my days that I got out of the market. You can go back. Receipts are on YouTube. January 27th. So that was January 3rd to the 27th. So let's go from like here to here. Again, really, really choppy. And here's the deal. You don't have to trade during any of this. You don't. Just trust the master key. I know it sounds crazy, but trust the master key. You want to see the SPY have the signal. Like, let's say you want to be long, so a SPY have a buy signal. The market trend on your charts, if it's got the 10 over the 20, price over 50, and then the market breadth, if that's bullish or bearish. And then before you even look at the sector breadth, if all 3 of these align, trading is way easier. It's almost effortless. You're not going to win every time, but it's going to keep you in the direction of what's actually happening. What's actually happening. Versus when you don't know what's going on and you're struggling and you're guessing and you don't have a plan and you see, clickbait on the internet saying, buy the dip, buy the dip. You don't have to do any of that. But to this point, let's go back here.
Moved sideways with excessive levels of volatility. However, since the beginning of 2025, early January, the money supply on a global scale has been moving back up again, and this growth rate has reaccelerated. All these things put together indicate that the market may have bottomed. This bear market may be over before it even began. In fact,
Man, this video is aging badly. That's aging badly. I don't know why, John, listen, I hope one day that you and I can collaborate on some stuff, but why look to the money supply chart, something like a Fed data point there, when the market will tell you what it's doing, right? Put in the chat how you would know when the market has bottomed. How would you know? I mean, I'm just a random guy on the internet. How would I know? How would you know? I'd really like to know that. By the way, let me introduce myself while you type that in the chat. Because I am just a random guy on the internet with a white shirt and a blazer on. But my name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start with less risk together as a team. Now, we're going to rank this video here in a minute, but I don't want you to be too hard on John. I like John. I like his content, but this is aging poorly. I just don't understand why he's making this big leap from the money supply to saying the bear market is over. Doesn't make sense to me. But yeah, Nate's got it. You're 10 over the 20, price over the 50. Lars has got it. Just Vlad's got it. Gene's got it. Quentin, exactly. When price moves above the 50, that's a great place to start. And Kari's got it. Brian's got it. The 10 moving average. Yeah, for sure. 3 magic numbers. I like that, Ozzy Ian. 3 magic numbers. EMA. Yeah, for sure.
We could be seeing the beginning of a market crash just to the upside. Historically speaking, this would line up seasonally as well, considering that February is typically a rough market month, whereas March and the second half of March tend to see positive returns in the stock market. It's impossible to predict the market, especially over short time horizons. But
why are you doing that, John? John, why are you doing? You literally just said this is the bottom. It's going back up. And then you're saying it's impossible to predict the market.
One thing that stands the test of time is Warren Buffett's advice to buy when others are fearful and sell when others are greedy. It does not mean that you will successfully time the tops and bottoms of markets perfectly. It does not guarantee by any means that you'll be able to.
No, and even if you have the outlier trend template, right, it will not pick the absolute top. It will not pick the absolute bottom, but it'll tell you when that happens. You can say, okay, that actually was the bottom. I'm here. Let's do this thing.
To time the tops and bottoms of markets perfectly, but it does give you a much greater chance of being able to accumulate more shares for lower cost and being able to buy assets.
I almost spit out my my sweet tea, my Milo's sugar-free sweet tea right there, out of my DuckTales mug. I gave up coffee for Lent, so wow. Okay, hang on. What?
Give you a much greater chance of being able to accumulate more shares for lower cost.
Yeah. How's that working for people who own AMD right now? How's that working? You definitely are able to acquire more shares for a lower cost. Yeah, no doubt about it. How about people who own Palantir right now? Right, they can definitely acquire more shares at a lower cost, hands down, no doubt about it. How about people who own Tesla? Yeah, I mean, you can acquire Tesla today. You can get a Tesla share half price compared to what it was just a few months ago. Isn't that great? Congratulations. The Tesla stock is on sale. The problem here is that we don't actually know when it's going to go back up. If it does go back up, we don't know if it's even going to go back up that high. So for sure, you can bank all those shares all day long. But it doesn't mean you're going to get paid. Doesn't mean you're going to get paid. You might be owning something that the market is telling you nobody else wants to own. You might be in SoFi and you're like, oh man, this is the greatest stock ever. I don't understand why there was such a huge movement around SoFi, and I was calling it a meme stock here in the videos, and I would get all these ugly comments about, don't you understand? SoFi is changing the game. It is completely revolutionizing banking, blah, blah, blah. They're gone. They're gone now. It was a meme stock. And meme stocks are great. You can ride a meme stock trend all the way to the bank, son. But if you are accumulating shares on its way down, doesn't mean you're ever going to get paid on those shares on any stock, because all stocks are bad. And like Brandon says right here, it should go up one day, right? It should have the most dangerous word in all of finance. It should go up. Yeah.
And being able to buy assets at a discount. And if you don't have the time or the data to go and look through and see if people are being fearful or greedy, yes, this video helps, but what about in the future? All you have to do is do a quick gut check. If you're opening up your account and refreshing it multiple times a day, multiple times an hour, or even multiple times a minute, because you want to see how much money you're making and how excited it's making you, and you start thinking about all the things that you're going to purchase with it, that's called euphoria. And it's
okay. That's a great point. That's a really great point. I got to tell you, anytime that I hear people getting really excited about a stock like SoFi, like Palantir. Yeah, that's a great point. That I can actually give that a lot of kudos there, John.
probably time to sell. On the other hand, if you're avoiding logging into your brokerage account, you don't want to open up your app, you actively ignore it because you have that knot in your stomach, that pit, that feeling like, oh my gosh, I don't even want to look at how much money I'm losing. That is called fear, and it might be time to buy. And if you want help,
Barf. Oh God. Oh, I'm sick to my stomach. I don't feel so good, John. No. Everything he just said is wrong. Do you really think now's the time to buy SoFi? Do you really think now's the time to buy Tesla? Could it be the bottom? Abso-frickin-lutely. Am I saying that it's going to crash from here? No, because I don't do that. I don't think anybody needs to do that. Are you saying that Palantir is the best buy of all time right here? This kind of mumbo jumbo is what leads people to buy stocks like AMD. Because someone on the internet said, hey, you know what? This is the low. It's going to go back up from here. It's awful. I'm really disappointed in you, John. I thought we were friends. I thought we were cool. What happened? Why'd you do this?
help from me applying ideas like this to your investing, sign up for my free news.
Sign up. Your turn. That's a really poor way to end that video. Go ahead and subscribe to this channel if you haven't already. Okay, let me get the rankings from this morning. All right, we got that over here. We ranked a Felix video this morning, and that was I think we came up with a 6 on that one. So I'm so disappointed by this, but it's really funny to me to see the overconfidence on that, John. I don't know, John. A lot of these people actually do know, but I don't know, John. Maybe one day. Where are we ranking it here? A 4 from Donna. Mediocre. Quentin says 4. Salty Brad says 1.6. Steve Jones says a 3. Rich 2. Jorn says 2.2. 3, just more YouTube horse baloney. That's right. I should have checked the smoker during that. Oh, what are you smoking? 7, always a 7. Okay, first off,
This video is definitely not a 7. And second off, nobody gets a 7 because I need you to think about it like, you know what? I don't want to be nice because everybody would get a 7 if we were nice. We need to be a little bit more. We need to be a little bit more critical. Give that feedback.
trying to figure out what we're trying to look for here, and that's why nobody gets a 7. Nobody gets a 7. A 3.14 pi. ESAT says 2. Guitar guy says 12. Daggum. Oh, he's smoking some chicken for the tacos. Man, I need to smoke a brisket. It's been far too long. Rena says a 0.5. Yikes. Okay. Jonathan says a 3, and that's generous. Dave says it's too conflicting. It's too conflicting. All right. Oh, NVIDIA. Surfer boy. Boy. I have not looked at NVIDIA in a hot minute. And you know what? You could probably accumulate more shares at a cheaper price right now. No thanks. No thanks. All right. I think the majority of it we're putting in F tier. And I really don't. Here's the thing. I feel like a total ass bag when we do this. Like I really enjoy watching videos that are worth watching. And I thought that this was going to be good because the last one we did, I feel like we ranked it in S tier. I thought it was actually quite good, but this one did not go well. Not go well at all. But now it's time for today's member highlight, which is definitely going to go well. All right. So in the Discord every day, I love to take a look and find something that I find interesting and showcase you guys. And I saw one earlier right here. No, where was it at? Here. Lego me ego. Lego my ego. We know what he's trying to say here. I actually think this was a great post. His biggest win for the week was following the trading plan and getting out of SCCO when it hit the half ATR stop loss. It did not bounce off the EMA, and I would have been even further out of the money had I stayed. So he says he would have had an even bigger loss had he stayed. As Chris says, it was a good trade, even though it was a loss. I'm proud to say that since I've joined the OVTLYR family, I now trade with confidence and not emotion. Kudos to everyone killing it out there. Yeah. So Lego my ego, you are absolutely the member highlight of the day. And not because I want to pat myself on the back. I think that that's great that you're learning something, but it's the fact that we are changing people's mindsets, completely changing people's mindsets, because there's so much hot baloney garbage on the internet talking about how buy the dip, or this video here, the bear market's over before it even started. And we got receipts, John. We got receipts on how you changed that name. The bear market just ended before it even started. The market bottom's in. Is it about to surge higher? Sorry, John. You were caught red-handed on this one. Red-handed, my friend. But that's okay. That's okay. Not everybody calls market tops and bottoms. Just people on the internet looking for clout. But be sure to share your stories in the Discord. And of course, the first rule of OVTLYR is you tell everybody about OVTLYR. I tell you every day. That is the way you can pay me back for everything that I do for you. Tell us somebody about OVTLYR. If you can do that, that's all I ask of you. And if you don't mind, hit the like button too. Now back to trading in the OVTLYR trading room. So real quick, what is OVTLYR and how does it work? Well, as John mentioned earlier, Warren Buffett would say, be fearful when others are greedy and greedy when others are fearful. But that does not mean you get to stand on the tracks. That does not mean that when your favorite YouTuber is telling you to scream buy AMD, that you're like, oh, you know what? This is it. Let's do it. And you get run over all the way down. That does not mean that. In fact, Mark Minervini, one of my mentors, we covered a video with him the other day, and he talks about contrarian trading, like Warren Buffett would say, would actually be the opposite, where when a stock is moving to higher ground, people think, oh, I can't do it. Oh, it's too late. Or they think, oh, I don't want to buy here. It costs too much. And yet, here's the deal. That's the only time it's going to move. It's when it's moving to higher ground. This is what you want. This is what you want to see. This is being greedy when others are fearful. And being fearful when others are greedy is the opposite. I know it sounds crazy, but it's just the truth. OVTLYR shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the OVTLYR move happens. And you can get into the annual pass for just 82 cents a day over at outlier.com. And if you're in the middle of your trial, just shoot us an email and we can upgrade you, no stress. Now, my style of trading using Outlier is called the golden ticket trading strategy, and it's where only price pays. I want to see the SPY with a 10 under the 20, price under the 50, which is exactly what we have. And I don't know how long we'll have it, but we certainly have it for now. 10 under the 20, price under the 50. Let me remove this. Now, market breadth is the next step. What is the market breadth doing? Market breadth over here in Outlier actually might be flattening out. We might start getting some buy signals. We might. I'm just saying, we might. But it is continuing to be bearish right now. If this crosses over the 10 EMA, it's going to look crazy, but the breadth might get bearish. And that might be those opportunities where people are starting to take chips at the bottom. We'll have to see. We'll have to see. So this is still a bearish trend with bearish breadth, which means the master key is unlocked. We still have a sell signal on the SPY. The market trend is going lower. Market breadth continues to go lower. And most of the sectors are also bearish as well. So next I will run the screener. Now my screener criteria is going to be different than yours, and that's okay. For me, I ran my screener here, which is a positive backtest, meaning our signals have a positive return, greater than a million daily average volume, a sell signal on that stock, 0 to 5% move in the first five or in the last 5 days. That way we're in before the outlier move starts. All market caps greater than $20 because I'm a snob. Heat map is basically everything except R40, R40 and above. And actually, Mahesh made a post in our Discord. We are going to revamp the fear and greed score to go from 0 to 100. Which I think is going to be a lot easier to read. So I'm looking forward to that. That's going to be coming here in the next couple of weeks. And you will see that in the live streams that we do as well. Back to this slide here. I want to see the heat map moving down. So the behavioral heat map, the fear and greed heat map. Like I want to see that moving down. This is a perfect example. And have a red overlay. The red is the downtrend overlay, which we hadn't quite got on the SPY yet. Here's a couple things. Little pro tip on here. The 10-20-50 is exactly what goes into the green overlays in the background. Mark and Mahesh actually backtested that and found it to be way better than their downtrend indicator. And so they changed it to that. The red indicator, the red background is actually a little bit different. That's why it doesn't match up exactly to this right here. Otherwise, it would have started a couple days ago. So either way, with all that said, those are my scanner criterias. And I don't see anything new today. The last ones that came through were SCCO and 5 below. And we already got in and out of SCO. 5 below. Let's look at 5 below real quick. I know when we initially looked at it, it had an order block right here, which is why actually a lower order block from where it is right now. It must have closed under that at some point, which is why I wasn't interested in it. But I wouldn't be interested in taking it today until I got a fresh signal. So for me, no stock set up, but that's okay. No stock set up for me today, but I want you to start putting your stocks in the chat. Let's go. Let's take a look at what you want to look at. And we'll get busy there. Let me close a couple tabs while y'all put those in the chat. All right. Who's first? Sorg with DE. DE. Oh, Peter says, I'll have to adjust my trading tool and fear levels change. Yeah, we're trying to make it a little easier with it 0 to 100 instead of 50 and -50 and all that stuff. I hope you don't mind there, Peter. We're trying our best here. All right, DE got a sell signal back on February 10th. Popped up a little higher, but now it's definitely trending downward. We can see the heat map peaked around G30 and it's moving down. The whole industrial sector is definitely getting quite fearful. For the 10, 20, 50 on here, we aren't quite to the bearish trend template just yet, but we're getting to that point. So DE doesn't look super brilliant for me. Salty Brad wants to look at Gap. Okay, cool. So let's zoom in on Gap. And I want to look at something real quick. Okay, 17% outlier returns versus buy and hold at 16%. I was curious about that. So it's moving down. We can see that it's getting a little bit more heat map value, R4. And then if you want to look on the discretionary sector, that's definitely getting a little more fearful as well. It did have a buy signal. And this is why I say just always keep your risk in check, because even with our best data, some of these buy signals don't work. But that's what I wanted to see first was this one in particular does have positive return. So just keep your risk in check, of course, always, always, always. Just Vlad wants to look at just LVMH. Do we not cover LVMH? We cover 2,500 stocks, LVMH. But when we find one that we don't cover, that's because it doesn't have enough data to go along with it. It doesn't have enough data that we need LVMH in order to put that inside of Outlier. But at some point, there's a good chance we'll have it in there. 10-20-50s actually crossed south right here. It's got order blocks on both sides. I mean, look at it like bouncing between these order blocks right here. And it totally could bounce right back up again. And ask you, how you doing, my friend? First time in a long time. Let's look at net. Cloudflare. This was one, actually the video that's going to come out right in 8 minutes is one that I did with, we reviewed a Felix video. And this was one of his picks that he would buy, which I was really concerned by that video because he's like, these are 5 stocks I'd buy in March. And then he goes through and he's like, I wouldn't buy this until that happens. I get that. But why are you going out and saying I'm going to buy this in March? I don't know. That clickbait just annoyed me. As you know, we got a sell signal here on January 31st. Cloudflare had a huge move up. This had peaked out, absolutely maxed out our greed value. 100% of greed. It has level 50 right here. And then a few days later, after the sell signal came, it started to come back down. And you can see right here, the greed value has really come back down. We're down a greed value of only 15. And the tech sector is getting very fearful, very, very fearful as well. Let's look over here if there's any outlier blocks. A couple built up right on top. But yeah, this is now in a bearish trend with the sell signal. Let's look at Docu. Ozzy wants to look at Docu. DocuSign is one of those stocks that popped off in COVID. If we zoom out. Right. And this is a great example of what the market cycle looks like. What do you mean, Chris? What's the market cycle? It's only this that's played out through the history of time. A stage 1 sideways consolidation trend, a stage 2 uptrend, a stage 3 consolidation trend at the top, and a stage 4 downtrend, and the cycle repeats. That's exactly what happened with DocuSign. Exactly what happened with DocuSign. And whenever someone says, buy the dip, this is a great company, etc., this is what can happen. This right here is exactly what can happen to any stock. And you can come up with all the justifications in the world that you want to say it should go up. It has this great story. It's only going to go up from here. It's a generational low. Buy as many shares as you can. And this could be the result. Now, I don't know what's going to happen, and neither do you. But I do know one thing. If you trade risk first, you never have to deal with that. You never have to deal with a round trip like this. So DocuSign has this order block all the way at the top. And that was around only $300 or so. And now it's down at 80. And it may never, ever, ever, ever test that again. It may never. I don't know. But DocuSign moving its way down as well. Very bearish right there. Let's go over here to DocuSign, DOCU. I hope, does that make sense? And why I really preach the fact that even though all the YouTubers are saying buy the dip, buy the dip, buy the dip, you don't really know if it's ever going to go back up. It could be exactly DocuSign, and it will possibly never, ever in the history of time go back to that level. Are you cool with holding those stocks? I certainly am not. DocuSign moving its way down. It had actually peaked really high, G48 on the greed value right there, and it's really, really come out. Definitely getting more fearful in that tech sector as well as DocuSign itself. Great choice. Thank you for letting me pontificate on that one for a moment. Paul wants to look at sand, and he's got some stuff coming out of his nose. Paul, you might want to get a tissue. I want to get tissue, my friend. Santander. Oh, we talked about this yesterday. Santander for the win. Yeah, that looks beautiful. On Santander, I would just make sure that you know where your risk is at and know where you're going to get out for sure, because that's a huge move on there, especially with the market being as weak as it is. To move like that is crazy, crazy, crazy. I'm having a hard time finding a company I like above their 50. Then hold cash. Simple as that. As simple as that. HSBC. This was one I traded earlier this year, HSBC, and I got out way too early. Here's my notes on this. In fact, this is when I traded it on January 23rd. I believe, if I'm not mistaken, what happened was the SPY, January 23rd, it was this candle right here on the 27th. I really thought it was going to close under its 20-period moving average on this date right here. And in the last 15 minutes of the day, it shot up. It shot up like crazy. And here's the deal. In my trading plan, I have a rule that if the market closes under the 20-period moving average, that is a sell everything. If the market closes under the 20, wait to put on new trades until the 10 EMA is recaptured. So I went to cash on this date right here on everything, including HSBC. So I got out earlier, but the market faked me out. And sometimes that happens. But you can see this is what a big, beautiful trend looks like. A big, beautiful trend looks like right here. Now, I managed to capture a couple bucks out of it, and that's how it goes, right? Sometimes you make a couple bucks, sometimes you lose a couple bucks. Let me remove my notes here. But yeah, HSBC is on a monster trend. Monster trend. Patrick says, is Gap still a business? I guess. My wife loves to shop at Old Navy. So I guess that's what keeps them in business. Actually, one of my very favorite type of shirts are the Old Navy. They're called like Cloudsoft 94 or something like that. Holy moly, they are so comfy. And I told my wife, I was like, every time you go to Old Navy, just give me every color they have, because that's what I want. Look at this heat map value. It started here at G21 and has basically gone up every single day since then. It's up at G42, getting very, very greedy, whereas the financial sector is getting weaker, more fearful, and the market itself is just looking weak as well. Justin wants to look at Meta. I also wanted to look at Meta. Actually, this was on the back of my mind. I was hoping somebody would say Meta. All right, Meta got a sell signal. While that loads in, let's go over here real quick. All right, Meta sell signal came on February 19th, my 39th birthday, and has been running off since that point. Its greed value got to as high as G32 out of 50. It's now in the fearful camp, while the communication sector is in the fearful camp. Your 10, 20, 50 are also now crossed down. This is a bearish trend at this point here on Meta. Absolutely bearish. So yeah, this is a stock that I definitely wouldn't be buying right now. But I want to tell you real quick before we go, if you are an influencer of any size and any genre, we actually would really like to work with you. I want to find that slide. Hang on. So please send us an email and we would like to work with you. We have some business opportunities we want to pass your way, and we want to start working with you right away. Of course, always please sure to tell me in the chat what you're trading and come back tomorrow where outliers are like us. We'll save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of those, and I recommend you have a fantastic day and join us on tomorrow's live stream. We'll talk soon.